Hi everyone, today we're looking at the MACD. Now the MACD stands for Moving Average Convergence Divergence, and it's an indicator that you put at the bottom of your chart. Now the MACD shows the relationship between two moving averages. This is what the MACD looks like. It's here at the bottom of our chart. You can see we've got 1, 2 moving averages here, and then we've also got this zero line, this center line here. We also have a histogram, which I'll come on to. So the MACD line is the blue one, you can see here. And then you've got the signal line, which is a slower version, which is the orange one. Now, the MACD is a lagging indicator. It's lagging because it's derived from past prices. Unlike primary indicators like support and resistance, which gives indications based on the live price. Now, how do we use it in trading? There are a couple of different ways we can use it. Firstly, identify whether or not it's above or below the zero line. When it's above the line, this indicates that it's trending higher. When it's below the zero line, it indicates it's trading lower. You can also use the crossover of the MACD line and the signal line as a trade signal. You can see here, this is where we got the crossover. As you can see, it was lagging, so it actually came around to this red one when it was confirmed, and we would have got that cross, and that would have been a buy signal. Now another signal is when the MACD crosses the zero line. So you can see here, this MACD line's crossed the zero line here, this providing a buy signal. Now the histogram, this shows the space between both lines. Gives you a better idea about when the momentum is slowing. So you can see here, whenever you get a smaller histogram, you can see that momentum slowing. So this is one of the earliest signals we can see whether or not a market is becoming overbought or oversold. It's important to use it as a secondary indicator, not a primary. Use it in conjunction with indicators like support and resistance, candlesticks and trend lines. Price action. Now the final way we can use MACD is something called divergence. This is where we identify highs and lows in the market and highs and lows in the MACD. Now you can see we've got a high here and a lower high here. Whereas in the market, you can see we've actually got a higher high and higher low. So this is suggesting that we will see this market slowly come off soon. That's also confirmed by the lower lows. So look, we've got a lower low here and a lower low here. Versus the market, we've got a higher low and higher low. This indicates that this market is beginning to slow. So any retracement down, we can potentially see it come back to these lows or potentially break it. In choppy markets, in sideways markets, the MACD is going to give you lots of false signals. So if we go into an hourly chart, you can see through this period, if I draw a rectangle through this kind of sideways period, every time we've seen a cross, the market's not really followed through. It's not really trending, and it's going to give you a lot of false signals. Thanks a lot, guys. That's it for MACD. Hope you enjoyed it. Speak to you soon.